So now I request Mr. Kamath to please take the charge from here.
Good evening, all. I have a very short presentation. I'll not take much of your time on this, maybe another 5-7 minutes on this before we go ahead on this. So infrastructure financing, I think since morning we have been hearing a lot about the kind of investment opportunities that have been coming up in terms of the projects that have been undertaken. But one of the key elements to any of these infrastructure projects is always what are the source of funds. Typically, if you look at it in the past, the kind of investments that have happened have largely been funded by government funding or funding instruments which have been backed by government. So typically, while this is one of the ways in which funding is expected to continue, I think there's always a need for a PPP kind of a model or other modes of funding which enable these projects to be kick-started. Because in the long run, when the kind of scale of the projects which are expected to be taking off, to take the GDP and the economy of our country from what it is about 3.7 trillion to about close to 7 in a couple of years' time, I think it's important that there are various funding options that are explored, which are presently in vogue, where what we see in some of the other markets also. This is just giving a highlight of the projects which have been undertaken under the National Infrastructure Pipeline Scheme, where the kind of projects which are worth about 1.3 trillion are in various stages of implementation. If you were to look at it closely, the projects which have been undertaken are largely around energy, infrastructure, both urban as well as rural, railway, and projects which are governed by the irrigation and the railways there. So what are the common areas where we are looking at funding? While I'll come into the larger aspects of what are the funding options which are available, typically anything which is required for a project of this kind or this scale typically revolves around whether it's a short-term kind of a money requirement or whether it's a long-term kind of a funding requirement. Typically, the long-term requirements go in terms of the managing the long-term requirements of procurement of assets and other requirements which are based around these projects. So one of the most common product which is available in the market is the asset-based lending, wherein the equipments which are required for setting up the projects are something which are funded. So these are typically through the loan as an option or leasing as an option. Now, equipment leasing as a product is not something which is very prevalent in India, typically given the kind of requirements that are coming from the customers. But if you look at in very developed markets or overseas markets, leasing as a solution is very much established. Now, at Tata Capital, we have been giving leasing as a solution, and many of the companies have embraced it pretty well, knowing that they have an option to return the asset or use the asset only for the useful life for what it is required for the project. The second part which is covered here is the supply chain finance. So typically what we are looking at over here is the working capital requirement for our customers. So when somebody is setting up a project, they will need money to buy the steel, they'll need money to buy the cement. So working capital is something that helps them buy that. So we have inventory funding lines, we have channel financing, we have products which take care of the receivables, etc. So these are something that get taken care through the supply chain financing. Rentals pay as you use is more of a abridged form of the leasing product that I spoke about, wherein it is used for a short-term nature, or is it used to feed for projects or requirements which are of a very short-term nature of say 6 months, 9 months, or maybe a year's time, wherein you need to fill in the gap required for the asset requirements for that stage. Structured financing. Now, structured financing is something I'll just touch upon shortly. But going ahead, factoring is another product which is also available for meeting the working capital requirements, because generally when a large infra company is investing into a project, there are various stages involved with the project. So right from inception to the sale or the billing to which they do to various institutions, the amount of money that they get from the customer takes time. So there are factoring companies or factoring agencies, including Tata Capital, we also to undertake factoring, which takes care of the receivables of the customers to ensure that they get timely working capital support to meet the working capital requirements. Uh, Renewable energy funding is something which is the talk of the town these days, given the kind of emphasis which is there on ESG focus, wherein if people are looking at innovative ways to fund their projects, the funding agency or the investor company is always wanting to be sure about the nature of the investment that they are doing in that company. So renewable energy is definitely something which is expected to take off in time to come, given the focus which is there in our country, particularly for the solar projects. So this is one area where we see there's a lot of opportunity, and the consumption of steel in this area is also to a large extent been taken care of through either the long-term funding or through the short-term funding requirements. Now the two parts is something that I'll try and combine, which is the project and the structured financing part. So typically, if you look at it, people have been taking funding from some of the schemes which are available from the government for funding these projects, because these are typically long-term projects which run extend for about 10 years, 12 years also. So given that as a background, there are various options which are available for customers other than the traditional banking or the non-bank funding schemes which are there. There have been focus and there have been nudges which have been coming in from various quarters to see whether there are options of instruments such as InvIT, where there can be very structured kind of financing options which are made available to the customers. These are typically instruments wherein large either foreign institutional investors or investors who are HNIs invest into these structures to ensure that the long-term requirement of these projects are taken care of. Now, these are at a very nascent stage as far as India is concerned. Yes, there are quite a few projects of NHAI, etc., which have been invested through the InvIT structures, but these are something which have a long-term opportunity in meeting the large infrastructure financing requirements that we have in our country. Then there are typical options such as corporate bonds or infrastructure bonds, which we feel are also an opportunity to replace some of the typical long-term funding options which are available with the banks. And these are something which are cost effective also. These are also options which meet the requirements of the project given the long tenure of these projects. And the beauty of these projects, beauty of these instruments is that given the kind of FII, which is the foreign institutional investors who have an interest in these kind of products, the cost of borrowing for the infrastructure finance company is much lower than what they would have done had it been a domestic borrowing that they would have engaged in. So these are some of the kind of opportunities that we see in time to come. Of course, there are institutions such as NAPFED, then NIFL, who have been instituted by the government to take care and initiate and kickstart some of the funding from these perspective. But I think in time to come, some of these structures, which are called as the alternate investment funds through the InvIT or through the REIT, will play a large role in funding some of the infrastructure requirements which are there in our country for various projects, irrespective whether it is for an infrastructure project for a road, whether it is for a port, or whether it is for a railway. Interestingly, even leasing, what I touched upon briefly, is used as a replacement for some of the funding requirement in the infrastructure in the railways also. Typically, the wagons, etc., are something which are taking shape for leasing as an option also. So these are some of the innovative ways which we feel in time to come can have a deep impact on arranging the funding requirement given the large scale of development which is expected to be happening in this country. So that's about it from me from the financing side of it. If there are any questions, would be happy to take session, and take it ahead from. That's all from me. Thank you so much.